Hi, welcome to the pre-first lecture that I wanted to put on here, even though I'd already made a few yesterday, to tell you a little bit about what we're embarking on in this first chapter. There are plenty of YouTube videos that are much better than mine, and you can go find them. I've got some of them on the Blackboard website. But let me tell you a little bit about what you need to know before you get started on those financial statements that I have in the other four videos. There are some basic formulas. The first one you have to understand is there's something called a balance sheet equation. Now, that makes sense. There's a balance sheet. We've heard that in the chapter. And there's equation. And we all know that with the equation, both sides have to be equal. That's math O something. So let me tell you, let's go back and define what the variables of this equation are so that we have a better understanding. You have an assignment called Where Do Things Go that was to help you sort of get used to these terms, but let me review these. Assets, they're on the left side of the equation and they're on the balance sheet, are something that you own. We've talked about that. So they're things that the business owns. Now I'm starting a business and it'll be the financial accounting 120 business. And I don't know what we'll do, but we'll create an idea for that. And what are some of the things that we own as a business? Well, we have to have cash. We can't do much without cash, right? We also own some other things. Accounts receivable is an asset. Accounts receivable is the term that we have for our customers who have not paid us yet, but we may have already done the work, but they owe us something. So if you owe me something because I did your taxes, then I'm going to bill you, and that's an asset too, because it's a future resource for me, and it is also something I own. Supplies are those little things like markers and other things, or pencils and paper, the regular day-to-day things that we use to run our business. Inventory is a different kind of account. It's an asset, it's still an asset, but it's different from supplies in that we sell inventory. So we may be in business to sell Expo markers. And if we're in business to do that, then the inventory would be the markers themselves. Prepaid insurance we'll get to later. It's a little bit more difficult, but we also own some other things. We own some equipment. So if we're going to have a business selling Expo markers, the equipment might be the bins that we put the markers in, or it may be some other kinds of sales equipment or something, office equipment. Building would be where we are residing. So if we own the building, it's an asset. Even if we have a mortgage on the building, it would still be an asset. Does that make sense? I think the assets make sense. The assets are what the company, whatever the company is, the Accounting 120 Financial Expo Company owns. Okay? So that's on the left side of the balance sheet equation. Then we've got these other two accounts that are a little bit more confusing. I think everybody knows what a liability is. That's a debt. So I'm assuming that you have that. And this is what I usually say to people. Do you have any debts? Yes. Of course we do. I do. I have lots of them. Unfortunately, sometimes they're harder to pay than we would like. So the liabilities are things that the company owes to other people. So one big one that comes up all the time is accounts payable. Now, you just heard me say accounts receivable. So accounts payable would be what? Well, how would that differ from accounts receivable? Okay, you're right. Payable means I'm going to pay it out. So I've gotten the expense. I've either bought the purchase already, the goods, or used the expense like utilities, but they're my bills. I haven't paid them yet. So those are my ordinary bills that I pay to vendors, creditors, or suppliers. Right? So for every payable somewhere, there's a receivable on somebody else's books. I'll have to think that one through a little bit. Then there are other long-term things, like we might have a note to start our business, or a mortgage, or a car payment. Something that is longer term, that would go in this section too. So the liabilities are things that we owe. That makes sense. Then the last section and it's in green, so you may not be able to see it. I'll try to get closer. Is what the stockholders own. Now we're dealing with a corporate structure here because the book it handles the corporations. You can have another form of structure like sole proprietorship or partnership, but we're going to be dealing with corporations. Corporations sell stock to start their business. So when they sell stock, like I start the business, the Accounting 120 financial class business, and we're going to sell markers or whatever we're going to do in there. I'm going to sell each one of you, I'm going to make each one of you buy a share of stock. When I sell that stock, if I am the company, just look at me as the company, then the company will be selling the stock. The company will get cash for those dollars, so $30, but you all have ownership in the business. Does that make sense? It's pretty difficult to understand. So the common stockholders are the people that the stockholders are the people that own the business. Now, I already talked about owning something else. What was that I talked about? Owning the assets. Who owns the assets? The company. So the financial accounting expo company owns the assets, but the stockholders own the company. Little confusing. The other piece of stockholders' equity is retained earnings. And there's a formula for retained earnings, and I'm going to go over that next. Retained earnings are the profit for the company for the life of the business, as long as it's been in existence, less any returns that we've given to the stockholders. Now, what would you call something that you give to a stockholder? Do you know? Dividends. So retained earnings, the formula is going to be retained earnings from last year plus new income less dividends is the ending retained earnings. So those are the only two pieces we have in stockholders' equity. So we'll have this side of the balance sheet equation, the right side, the two of these things added together must be equal to the total of all the assets. That's the balance sheet equation and sort of an explanation on each of those accounts. Now you have that assignment, where do these things go? And that's to say, what kind of account are they? And then we'll talk about the basic statements. Hopefully that makes sense. Now let me talk about the statements a little bit. Let me see if I can turn this page and not have to stop the video so you don't have to keep pumping videos. Sitting here in my kitchen, it's a lovely AC day outside, and I'm trying to figure out how to do this, and I'm trying to write it as well as I can. You can see that you can't see this very well, but maybe you can zoom in, and we'll try it later in class. The three statements that we're going to focus on in this first chapter are the income statement, the statement of stockholders' equity, and the balance sheet. And you can find that in that chapter in lots of explanations. You can also find it all over the web and any accounting book. They're traditional statements. You can open any book and find out more about it. What does the income statement do? Okay, I love to just ask these questions and have you answer. The income statement shows what the profit of the business is. So the formula for the income statement is going to be revenue minus expenses, and I'll show you that statement in a minute. So that's what you're telling your readers. Did we make any profit this month or this year? Is it important to make profit? Well, I mean, you may make a loss, but it's important to inform your readers what's happening, and you do want to let them know if you are profitable. The statement of stockholders' equity is sort of a linking statement that will take the net income from the income statement and help you put it into retained earnings. And remember, a few minutes ago, I talked about the formula for retained earnings. So in that statement of stockholders' equity, we're going to show everything that changed to those two accounts in stockholders' equity. What were those two accounts that are stockholders' equity? Common stock and retained earnings. So the only thing that ever changes to common stock is if you issue more or if the company buys it back, but we're not going to buy any back. So if we issue new stock, that will show up on this statement. If we don't, it will just stay the same. Retained earnings is going to change every period because you're going to have profit or loss, even if you may not have dividends. So those two things are going to be shown on this statement of stockholders' equity. finally, a real important statement, they're all important, is the balance sheet. And you've probably heard this sometimes when you've had to do a balance sheet for the bank and show them your assets. So the balance sheet is sort of exactly like that balance sheet equation. It's going to have assets on it, liabilities, and your stockholders' equity. And the point of that is to show at a date and time what you have in your business. Okay, so I'm going to show you those three statements in the next video, but I want you to remember a couple of formulas before we go to the next one. The formula for retained earnings is beginning retained earnings. Now where would you get beginning? From last period. So if you were in business last year, this came from last year's ending retained earnings. Plus the net income for this period minus any dividends. Remember, you don't have to give dividends, but if you do give dividends, will equal your ending retained earnings. Now, this is my wonderful writing that you've seen on the board, but I'm trying to do it a little bit neater. The other formula I want you to remember is net income is equal to revenue minus expenses. And you'll see that, you'll be doing that quite a bit on this income statement. And as a review, what was that very first formula I told you in this video? Do you remember? It's called the balance sheet equation. What is that? Assets is equal to liabilities plus equity. So if you've got all this I have now, you're good. I will stop this and go on and show you the basic makeup of the statements in a short little video, and then there's a problem attached to this too.